So let's say you want to get started with this investing thing. You probably have some money saved up and you don't have enough to buy a house, but you should probably invest it in something. You can invest in stocks, you can invest in shares, there's equities, there's corporate bonds, there's government bonds, there's crypto, and all these other confusing things. You might have seen those gurus that teach you how to day trade. And in light of all this confusion, I hope I can share some information to get you through this investing journey. So I'm currently 20. I started investing since I was 14 years old when my parents told me that, hey, you know, the money that you save in your piggy bank, you can actually put that into something and with time it'll grow. And so in light of that, I gave them what little I had, which was like $30 at the time. And they bought me my first stock, which was it. So I gave them what I had. So I gave them what I get make more money. So what I did was I just gave them what little money I had, which was like $30 at the time, and they bought my first stock, which was AirAsia.
You don't want to be like this. This is disgusting.
And since then, I've learned so much about investing that I hope I can share some information on you in light of the confusion that you have. So I'm gonna break this video down into 4 different parts. Part 1 talks about the basics and the philosophy behind investing. Part 2 talks about how to invest, so the specifics into how you can actually invest in a stock. Part 3 talks about the common fears and questions you might have when it comes to investing. And part 4, the best investing strategy out there. Part 1, why you should invest. This part talks about the philosophy and the theory behind investing. So why should you invest? Well, the point is for your money to actually make more money. So let's say you hide money under your bed. You might be thinking that it's safe, but this thing called inflation actually slowly eats up the value of it. For example, let's say you buy the newest iPhone for $1,600 today. That is actually possible today, but in 3 years' time, inflation happens and the price increases, and then you can no longer buy that iPhone for $1,600. To combat this, you could invest your money. And the whole idea with investing is that what you buy now, the asset that you buy now, would hopefully, fingers crossed, generate more money in the future. And there are 2 main ways that this can happen. The first is that the value of the asset that you bought is actually worth more in the future, so you sell it for a higher price and then you gain a profit. This is known as capital gains. The second is that whatever asset you bought can actually generate money over time. And I'll get a bit more into this later on in the video. So let's say you bought a house. A house has 2 main ways to make money. There's the rental income you get, so when you rent your house out to tenants, you would get money from that. And secondly, hopefully, fingers crossed, is that the value of the house actually goes up over time. Now, houses are actually an interesting example because you get what is known as passive income from the money that you get from tenants. And with most assets, you typically don't get much cash flow with the exception of stocks and shares. And I'll explain this on in a bit. So chill out and chill, okay? So there are many types of investments and asset classes out there. You might have heard of some of these, but aren't that familiar with them. So that there are stocks and shares, hedge funds, index funds, there's mutual funds, there's equities, there's bonds, there's government bonds, there's corporate bonds, there's crypto. You might have heard of luxury watches. You might have heard of also people investing in art. Oh my god. And this can get complicated very quickly. So for simplicity's sake, for the rest of this video, I'm going to be talking about the traditional meaning when it comes to investments, which is stocks and shares. This is the most accessible way to start investing for normal people like you and I who don't have a lot of money, which is what you need if you want to buy a house. And it's also not as risky like you would if you invest in crypto. And it's also not as time consuming like you would when it comes to like day trading and looking at charts all day. So this is the type of investing you see when people say, I want to buy Apple, I want to buy Nvidia, I want to buy some Microsoft. So that's what we're going to talk about today. Part 2 of this video talks about how to invest. So when you're investing in a company, what you're essentially doing is you're taking a chunk of that company, you're buying it, and now you actually own part of that company. You're now a shareholder. So let's say I want to buy an Apple stock. If life was easier, I would be able to go to the website, the Apple Store website, select how many shares I want to buy, and boom, click, add to cart, buy, and I'm now an Apple shareholder. In an ideal world, that is what would be the case, but we are not in an ideal world. Life is a lot more complicated. So what we actually have to do is go through what is called a middleman, which is a broker. So once I actually go through this middleman, I can buy the stock, and now I am an owner and a shareholder of Apple. I actually have Apple in my hands. Like not literally, but you know, okay. Anyway, of course, we could just buy the largest companies in the world like Apple, Microsoft, and Nvidia, and In that case, it will be stable. We would make good returns, but what we're actually doing is we're missing out on the smaller returns from the smaller cap companies because they still have a lot of room to grow. Whereas if we just buy the small companies, then we would be quite risky because they don't have the same stability as the top stocks. They're literally full-time people whose job is to figure out which stocks to buy, which stocks to sell, when to sell it, whether their valuation is overvalued or undervalued, all this like fancy stock terms that you see floating around. And you and I simply just, again, we don't have the time to do this sort of thing. And even then, people whose full-time jobs is to actually do the stock market, they can still be wrong. But what if I told you there was a stock that you can buy that makes it so that you own hundreds of stocks at the same time, from the biggest company stocks to the lower market cap stocks, and you get the benefits of stability, you also get the benefits of the high growth, you get the dividends, you get everything, and you get the best of all the worlds? Is there even a stock like that? An index fund is basically a basket of stocks. For example, in Australia here, we have the ASX 200, which tracks the top 200 companies in Australia. And in the US, you guys would have the S&P 500, which tracks the top 500 companies. So by buying these funds, essentially what you're doing is you're owning all of these top company stocks at the same time, simultaneously, by the weight of their market cap. So let's use VOO as an example. This is an S&P 500 ETF, as you can see. In their website, it breaks down what stocks are in the portfolio once we buy them. So here we can see that Nvidia is the number one stock at 7.75%. Then we have Microsoft at 6.8%. So let's say I put $1,000 into VOO. So what that will look like is $75.50 of that will go into Nvidia, $68.70 will go to Microsoft, $63.20 would go to Apple, and it just keeps going down the list just like that. Putting your money into an ETF like this makes it so that you don't have to buy and sell shares and check the stock market every single day because, well, this ETF does it for you. So my GOAT, Warren Buffett, has actually run multiple experiments, including one in 2008, where he made $1 million bet on the fact that the S&P 500 would outperform most in professional investment stock picks over a 10-year period. And he was correct. Anyways, feel free to look into all these other hedge funds, mutual funds, and other ETFs that specialize in their niches, because I definitely do that myself. But for average investors who just want to get good returns and then just not look at anything, I think that the best option there is still the S&P 500 funds or the ASX 200 funds if you're in Australia. Now, to buy an ETF or any stock for that matter, you need a brokerage. So there are eToro, Trading 212, Webull, there is Moomoo. But what I use personally is Stake. It doesn't really matter which one you use, to be honest. So another thing a lot of people ask is whether you need a lot of money to get started on investing. And the answer is no. Look, I started when I was 14 by giving my parents $10 every single time I saved enough money. And when I turned 18, I got a job and I put in $100 every single time I gained $100 in savings. And slowly that compounded from the past 6 years to now what is basically it's just above $45,000. And so my biggest tip is that just put whatever you can, let the compounding happen, just let the magic happen, and then your investments will go up in no time. Now, part 3 of this video talks about the common fears and concerns and common questions you might have when starting out on investing. Now, although it's very unlikely that you lose money because Apple collapsed overnight, it is likely that you will lose money because Apple dropped in value overnight. So many people have concerns like, what if my investment drops to zero? Well, I've got 2 things to tell you to put your mind at ease. Firstly, if you bought an index fund, you won't have to worry about that at all, because if a company collapses in the market, it makes up such a small percentage of your actual portfolio in that basket of shares that you barely even see a difference. Secondly, you have to understand the difference between realized and unrealized loss. So let's say you buy Apple, for example. You buy at $200 and Apple releases some bad news that the phone's exploding and the stock drops 30%. And you sell at that point. Now that 30% is now realized loss. The loss that you had before is called paper loss. It's not actually real loss, but it is real loss because you have sold it and now it is real loss. The same thing goes with profit. Yeah. If we look at the general trends of the stock market, we can see that no matter what, it generally always goes back up given enough time. We've seen this in 2001 with the dot-com crash. We've seen it in the 2008 financial market crash. It always goes back up. Okay, cool. So now you know why people invest, you know how to invest, you know what stocks to buy and sell, and you're not even fearful about the market going up and down because you know that with time, the stock market generally has an uptrend. Everybody has very different opinions about when the best time to buy is. But let me just tell you this phrase that really helped me, which is time in the market beats timing the market. Time is literally your ally. Our GOAT says that the best way to benefit from long-term market growth is to remain consistently invested rather than to jump in and out based on market forecasts. The best time is to buy is now and to keep buying no matter what. This can be every day, every week, every month, every 2 weeks, every 2 months. As long as it's consistent and you're buying, you're doing what's right. This investing strategy is called dollar cost averaging. It is the most straightforward way to invest because it avoids emotional stress from looking at the market going up and down. And also it's a good system for you to follow where it's a habit every single day. Every single time you get your pay, you just buy and buy and buy and buy. Eventually you'll build up to a big portfolio. Even like me, right? I'm on a low income, but I have saved up a surmountable amount just by putting in consistently, whether the market is high, whether the market is low, and all the ways in between. And now I have this amount of money. This works because it's a system and it's not based on emotional stress from looking at the charts all day. You just put it in, set it and forget it. Anyways, I hope you learned something useful in this video. If you would like to learn more about investing or productivity, make sure to stay tuned and to subscribe. And I'll post like a video in like 4 months or whatever.